If you're thinking about buying a home in 2026, you may be wondering, should you buy now or should you wait? I'm Brian Jahanbin with Maxim Lending, and I've been in the mortgage business for over 20 years. Let me give you a quick look at what I believe buyers need to know about the housing market for the rest of 2026. First, let's talk about mortgage rates. As of late July 2026, 30-year mortgage rates are generally in the mid 6% range. That's still higher than what many buyers would like. But remember, the Federal Reserve does not directly control 30-year mortgage rates. Mortgage rates are heavily influenced by inflation, the economy, and the bond market. So even if the Fed lowers rates, mortgage rates don't necessarily drop immediately. Now let's talk about home prices. The good news for buyers is that home price appreciation has slowed significantly compared with the pandemic years. Current 2026 forecasts are calling for relatively modest price growth nationally. That doesn't necessarily mean we're heading toward a housing crash. In fact, I think we're moving toward a more balanced market. One reason is inventory. As more homes become available, buyers have more choices and potentially more negotiating power. That could mean negotiating the price, asking the seller to pay closing costs, or even getting a mortgage rate buy-down. And here's something important. Real estate is local. Don't make a buying decision based only on national headlines. Look at what's happening in your specific city and neighborhood: inventory, days on market, price reductions, and recent comparable sales. So, are we headed for another 2008? I don't see the current national data pointing toward a repeat of 2008. That doesn't mean prices can't fall in certain markets, but a correction is very different from a nationwide housing crash. So should you buy now or wait? My advice is simple. Don't try to perfectly time the market. If you have stable income, good credit, enough reserves, and you can comfortably afford the payment today, it may make sense to start looking. And remember, you don't necessarily have to marry your mortgage rate. If rates fall significantly in the future, you may have an opportunity to refinance if you qualify and the numbers make sense. But don't buy a home you can't afford today, hoping rates will come down tomorrow. I'm Brian Jahanbin with Maxim Lending. If you want me to run the numbers and show you what your payment and financing options could look like, comment "quote me" below. And don't forget to like this video, subscribe to Home Loan Secrets with Brian Jahanbin, and turn on notifications. Thanks for watching, and I'll see you in the next video.